Welcome to the second episode of the Investing is Hard podcast. In the last episode on Dubber, I left off mentioning another potential red flag that hadn't been raised back in 2017. Someone, codenamed Happy Dice, wrote a blog post on a man named Gavin Campion. Gavin had just pleaded guilty to falsifying revenue through sham license agreements on another company and was awaiting sentencing. And I will give you one guess which company Gavin had previously served as a non-executive director of. That's right, Dubber. So, Happy Dice raises the question, if Gavin gained revenue with fake license agreements, then what's to say the same wasn't happening at Dubber? He even pointed to distribution agreements that triggered performance shares being issued to directors but never seemed to result in any actual revenue. Now, we know that's not what ultimately did Dubber in. But the point is, it's always worth doing a background check on a company's management and directors. It doesn't have to be Pinkerton's level detective work. A simple Google search could have put this on your radar. That's how I found it. That brings us to today's episode. We are looking at the other company, the one where Gavin was president, KIT Digital. We're going to look at how a roll-up strategy concealed a massive fraud that ended with its CEO arrested and serving time in Colombian prison before being extradited to the US to face charges. As always, this is a case study, not investment advice. The story of KIT Digital is the story of Kaleil Isaza-Tuzman, the KIT being his initials. In October 2010, Forbes published a profile on him titled Startup.com, the sequel. Startup.com references a 2001 documentary. You can watch it on YouTube. I'll link it in the description. It followed the rise and fall of Kaleil's first company, GovWorks.com, which is basically an online portal to pay parking tickets. The company blew through over $50 million in capital before the company collapsed. CNET ranked it one of the top 10 .com failures. But the Forbes article framed the failure as more of a comeback story. Kaleil mentioned a call from a major investor, which included KKR, politicians, after GovWorks went bust, who told him, quote, "I made a mistake with you. I usually don't invest in people who haven't failed before." Now, Kaleil, a Harvard grad who'd worked at the Goldman Sachs ARB desk before leaving for GovWorks, had learned from his mistakes and was now an experienced, quote, salvage man for hire, turning around failed tech companies. There's even a story about him threatening a landlord, well, the landlord's property, with a baseball bat just to get a company out of a bad lease. And it worked. In December 2007, Kaleil bought a piece of Rue Group, gutted the staff, replaced them with his old colleagues from an earlier company he worked at, moved the engineering hub to Prague, where he could get engineers for half the price of Silicon Valley talent, and renamed the company KIT Digital. Now, this is the late 2000s, early 2010s. All the things we take for granted now are taking off. YouTube's big. Netflix is starting to stream. The iPhone's changing everything, right? Every company wants video online. And that is where KIT Digital came in. They offered an end-to-end software platform that could handle the entire online video lifecycle, taking raw video files, transcoding them for different devices, managing the content, publishing it, analyzing viewership, monetizing with ads. They had a 3-screen story, delivering video to your PC, your mobile phone, and your TV. The company went on an acquisition spree, rolling up a bunch of smaller video tech companies like The Feed Room, KickApps, Kite, and many others to build out its platform and customer base. They had hundreds of customers, including Disney, McDonald's, FedEx, Google. By October 2010, KIT Digital controlled 25% of the internet video platform business. But by April 2012, Kaleil Isaza-Tuzman had left the company. So let's look at what was going on under the hood. It's a bit messy, but it's easier to follow once you understand there's basically 3 intertwining schemes. One was a hedge fund turned Ponzi scheme. 2 was manipulating KIT Digital stock price. And 3 was KIT Digital accounting fraud. There's also 3 main parties to know. We already know Kaleil Isaza-Tuzman, who ran KIT Digital. The second is the Amanat brothers, Omar and Irfan. Omar was once called the most powerful person in Hollywood you've never heard of. He was the co-founder of Peak Group Holdings, which was the largest investor in Summit Entertainment, which in turn was the studio that blessed us with the Twilight Saga. After Lionsgate acquired Summit, Peak became one of Lionsgate's largest shareholders, owning almost half the company. Before all that, he'd founded a brokerage firm that was processing over 10% of NASDAQ's daily trading volume by the time he sold it to E-Trade in 2002 and became one of E-Trade's largest shareholders. He was named one of Wall Street's top 10 most influential technologists. He married a model. His first cousin was an aide to Hillary Clinton. He also had a number of lawsuits over the years surrounding frauds, deception, backdating documents, etc. A bit of foreshadowing. And the third person is Stephen Maiden, who ran Maiden Capital, which was a North Carolina hedge fund. So we're going to start in June 2008. Omar Amanat asks Stephen Maiden, the North Carolina hedge fund guy, to make an investment in Enable Invest, which was a Dubai-based hedge fund run by Omar's brother, Irfan. With me so far? Now, initially, Stephen said no, but for whatever reason, 2 months later, Maiden Capital ended up investing $1 million. 3 months after that, Omar asks Stephen for another $2 million. And by the way, Maiden Capital only has $8 to $10 million in assets. $2 million was supposed to be a 1-week show money loan used to induce a larger investment from another investor. In return for this 1-week loan, Omar promised he would steer $5 million of capital into Maiden Capital. So Stephen figured why not, and made the loan because he was under the understanding that Enable would not move or invest the funds anywhere. The cash would just stay in Enable's bank account and be wired right back. Heads I win, tails I don't lose much, right? Well, as these things go, instead the Amanat brothers used part of the loan to satisfy a more than $1 million redemption request from, any guesses? That's right, Kaleil Isaza-Tuzman. Kaleil had invested in Enable through KIT Digital, but wanted out because of, quote, unacceptable delays in receiving cash upon request. So you'll be shocked to learn that Maiden Capital's $2 million 1-week loan was not returned after the agreed upon 1-week period. Now in December 2008, before Stephen Maiden knows that his money has been used to cash out KIT Digital, Stephen, Omar, and Kaleil enter into a written agreement, a written agreement to manipulate KIT Digital's stock price. Like an actual contract with dollar amounts, time required to hold the stock. Now, Omar and Kaleil told Stephen that a fund was liquidating and would have to sell a bunch of KIT Digital stock quickly, so they needed someone to support the price and volume. In exchange for Maiden Capital supporting KIT Digital stock, Kaleil and Omar would compensate Stephen with a share of KIT Media's profits. KIT Media was Kaleil's special investment vehicle, the value of which hinged on KIT Digital stock price. Now, in case you're not well versed in securities law, that is all very illegal, and they made a fucking contract. Also, during that agreement, Omar convinced Stephen to delay redeeming his Enable invest, but by January 2009, Stephen expressed concern about his December 2008 statement, saying, I only made $8,000 over the month on $3 million in assets. He was starting to sense that something wasn't adding up. So in February, he requests a $500,000 redemption out of the $3 million he'd invested, saying he couldn't operate his business, he had almost no free trading cash and needed to meet redemptions because, remember, this is February 2009. So Irfan emailed his brother, quote, Omar, can we do anything? Omar responds, these guys had humor. Yes, send him back 500,000 ASAP. Oh, I forgot. We don't have it. 1,000 exclamation marks. That is why this an absurd question. So in March 2009, Stephen, the Amanat brothers, and Kaleil all get on a call where Irfan tells Stephen that Stephen couldn't redeem any of his investment because, and this is another direct quote, the bank where the funds were kept had frozen or gone out of business or something in the craziness of the market in the fall of 2008. So later in the month, Steven's desperate for money. So Steven gets on another call with Omar and Kaleil, where Steven finally learns that the Amanat brothers had used Maiden Capital's investment in Enable to satisfy KIT Digital's redemption. So, in a show of world-class reciprocation tendency to keep Maiden afloat, Kaleil uses KIT Digital to wire Maiden Capital a $200,000 investment to help satisfy pending redemption requests and to buy KIT Digital stock, because remember, there's an agreement to manipulate the stock price. Now, KIT Digital's outside auditor got a little bit concerned that KIT Digital's, quote, investment was made with the explicit understanding that Maiden would, in return, invest in KIT. But Kaleil told the auditor, don't worry, KIT Digital has never had any understandings or agreements with Steven or Maiden Capital, implicit or explicit. In July to August 2009, Steven told Kaleil that he was desperate for cash and couldn't support KIT Digital stock price anymore. So Kaleil made a personal investment of $250,000 into Maiden Capital. And by September, while Kaleil rang the closing bell at NASDAQ, Maiden was coming to terms with the fact that there was no money in Enable. But he runs a hedge fund. He needs a statement to put out numbers to his investors. So Irfan sends Steven a statement saying that Maiden Capital had an available balance of over $2 million. And so things seemingly go on like this for a while. Kaleil told Steven at one point they were, quote, brothers in this. Beautiful sentiment. It's the friends we make along the way, am I right? In February 2010, KIT Digital wired more money to Maiden Capital to continue purchasing KIT Digital stock. Steven keeps trading KIT shares, sometimes selling for less than they paid just to create volume. And it's also during this time that Kaleil, along with Robin Smyth, who was KIT Digital's CFO, and Gavin Campion, remember him, the Dubber director from the intro to the episode, he was KIT Digital's president. So together in 2010, Kaleil, Robin, and Gavin launched a scheme to inflate the company's revenue, like a product launch only for fraud. Now, understand, Kaleil's ultimate goal here is to sell his company, KIT Digital, to private equity investors. So, of course, let's inflate revenue to make it look like a more attractive acquisition candidate. And basically, they'd create fake invoices and revenue to cover any shortfalls in quarterly revenue or profits. Kaleil had a very strict goal to hit analyst expectations, usually to the high side. And so, for example, they'd create these fake perpetual licenses, like the ones Happy Dice in the blog post I mentioned earlier was worried about Dubber doing. To generate fake revenue for these fake licenses, KIT Digital would issue fake invoices. Now, to make those invoices look collected, KIT would send its own cash out through attorney or escrow accounts and friendly intermediaries. There was one former employee of KIT Digital who went along with all this. And then they would send the cash back into KIT and record the returning cash as a customer payment. Now, because the outbound cash was often off book or through escrow accounts, the ledger mainly showed the inbound collections and not the original source. And voila, you have fake revenue. A bit oversimplified, but you get the idea. KIT Digital recognized tens of millions of dollars doing this. Kaleil, Robin, remember the CFO, and Gavin, the president, called these fake transactions elephants. But ultimately, you want to get out of this cycle of fraud, right? So what do? Well, you commit more fraud, of course. In February 2011, Robin came up with a brilliant plan to pay off or hunt elephants by adding fake restructuring fees to the price of companies that KIT Digital was acquiring. So they'd say that the money These restructuring fees were being used to integrate the acquired company into KIT Digital. But in reality, they'd use all the money, which would be deposited into an escrow account, for round-trip transactions designed to pay off fake invoices. Kaleil was so excited at the idea that he apparently jumped out of his chair and said, "Can we do it, Robin? Can it work?" So they start adding restructuring fees into their acquisitions. But the wording was a bit tricky. Kaleil sent Robin, again the CFO, a draft for a term sheet for an acquisition with a $6 million restructuring fee. But Robin said, quote, "We can't put restructuring in like this as auditors would expect an accounting for it if they see this. There really can be no external view." In other words, if the term sheet for an acquisition stated that KIT Digital was going to spend money on restructuring, auditors would expect to see and do auditing on the money they supposedly spent, which would be problematic considering they're currently engaged in fraud. So while they're figuring all that out, Kaleil wanted to redeem his personal $250,000 investment in Maiden Capital. But Maiden Capital didn't have enough liquid assets to satisfy Kaleil's request. So Kaleil did what any rational person would do. He arranged for KIT So Kaleil did what any rational person would do. He arranged for KIT Digital to invest $250,000 into Maiden Capital so that Maiden Capital could use that money to redeem Kaleil. And no, none of this is being disclosed to investors, auditors, board members, the SEC, or anyone else. So in the beginning of March 2011, Kaleil gets his money out of Maiden Capital. But then Maiden Capital received another $1 million redemption request, which was the first one that he absolutely could not meet. Steven tells Omar. Omar agrees to provide a loan to Maiden Capital so that it can pay the redemption. But, and this is kind of crazy, as part of the agreement, it strips Steven of his role as Maiden Capital's sole managing member and gave Cornucopia, which is the entity that this deal is going through and is also controlled by Omar, it gave Cornucopia, quote, control over operations and business decisions of Maiden Capital. The agreement also transferred Maiden Capital's assets to Cornucopia until the loan was repaid. Guys, I mean, this is other people's money. In June 2011, Cornucopia wires $330,000 to Maiden Capital from Enable Invest's bank account. And then, as things would go along, Omar would sometimes suggest, hey, maybe you should mark down the value of Maiden Capital's investment in Enable. You know, hey, maybe we should just be honest. But Steven was worried with the Enable investment being such a large percentage of his AUM, he'd get sued, possibly leading to the authorities like the SEC or FBI, which would all inevitably come back to Enable, the Amanat brothers, and Kaleil. Quote, it would be a disaster. So in July 2011, Kaleil, Omar, and Steven meet at KIT Digital's Manhattan office to figure out how to save Maiden Capital. Before that meeting, Omar texts Steven saying, among other things, quote, securities violations have occurred, criminal behavior jail time. Oh man, bottom line, fund needs to be made whole or ship will sink. Too bad that signal wasn't released until 2014, right? The meeting didn't produce any useful ideas. It just gave prosecutors more ammunition. But Enable continued to wire Maiden Capital funds, in part to cover redemptions. Steven was also getting a $10,000 a month stipend because he couldn't afford to pay his mortgage or living expenses. And then, of course, he had to continue manipulating KIT Digital's stock price. Now, in August 2011, Jesse Ellington, who operated a hedge fund and was invested in Maiden Capital, was trying to redeem his investment. So Steven arranges a phone call between Jesse and Omar. And Omar tells Jesse to, quote, hang in there and, quote, things are going to be okay. Maiden's trading in KIT Digital stock continued through September 2011, even though he had limited assets at that point. At trial, the government would show that Maiden had made over 3,500 trades in KIT Digital stock from the end of June 2008 through mid-September 2011. Remember that elephant scheme? Well, they kept a spreadsheet of that, contrasting KIT Digital's real revenue and fake transactions. By September 2011, the amount of falsely reported revenue was almost $38 million. So, by December 2011, Kaleil is ranging for restructuring fees we mentioned earlier as a side deal. So, for example, in one deal, he tells the KIT Digital board of directors that the deal would be $7 million in cash and $21 million in KIT Digital common stock. He then negotiates with the other company, the one that he was going to acquire, to set that cash aside for the restructuring expense. Now, initially, the other company wanted to keep that cash reserve in an escrow account that KIT Digital would draw from as needed. But that's a problem since KIT needs it all to pay off fake invoices. And this cash reserve was also supposed to be in a side letter not disclosed to auditors or investors. So Robin, the CFO, emails Kaleil saying he's hitting a brick wall in the restructuring, with the company wanting to know all the details of how they're going to use the cash, that it should be kept in an escrow account that KIT Digital draws from. Basically, the company being acquired was insisting on being part of the use of the restructuring process, which is probably a rational idea. But KIT Digital would lose control, so no bueno. So Kaleil responds, quote, you have to be able to believe the bluff to carry it out. Inspiring. And to be nonchalant, but say they don't know how hard it's going to be to integrate and it would be easier and they'd feel safer having the cushion and the control of all that cash at once. Ultimately, the company agreed. KIT Digital, quote, paid $7.85 million in cash as part of the transaction, which was then given back to KIT Digital for restructuring. Now remember, KIT Digital's board of directors and the auditors believe that the $7.85 million is going to the shareholders of the company being acquired. They had no idea that the money is being set aside for, quote, restructuring. Well, I know you're going to be shocked to learn that this plan of telling every party a different story and taking a dollar out of your left pocket and putting it into your right ultimately collapses. KIT Digital is never sold to private equity investors. In the first quarter 2012, KIT Digital's outside auditors and the audit committee of the company's board of directors began questioning Kaleil about his relationship with Enable and the Dubai-based escrow account used for round-tripping transactions. By April 2012, Kaleil and Gavin are out of the company. Robin, the CFO, made it until November before getting kicked out. And despite Omar telling Jesse Ellington to hang in there and that everything would be okay, it just wasn't going to be the case. In June or July 2012, Maiden Capital failed, and the investors in the fund lost all their money. All right, I know we covered kind of a lot. As I said before, there were basically three schemes going on. There was Maiden Capital converting into a Ponzi scheme, as well as participating in the conspiracy to manipulate KIT Digital stock price. And then there was the KIT Digital accounting fraud. So how did all this play out from a KIT Digital shareholder's perspective? Well, in November 2012, KIT Digital announced that it had to restate more than 3 years of results, 14 quarters, citing revenue recognition irregularities around perpetual licenses. Shares lost more than half their value, and Kaleil, who's no longer with the company, remember, he actually puts in a bid to acquire the company with the help of some unnamed private equity partners. And he was offering more than twice where the shares were then trading. But the market didn't believe the offer. I'm sure he felt he had really no other option. Mid-December 2012, NASDAQ halts trading in KIT Digital pending more information. A week later, KIT Digital fired its auditor and said it would delist from the NASDAQ. and shares stayed halted through the delisting. A few months later, in April 2013, KIT Digital disclosed a Chapter 11 bankruptcy plan supported by major shareholders and a plan to continue the core business in a new entity. And they officially filed for Chapter 11 soon after. And by August, the courts approved the restructuring. The operating assets relaunched as Pixel, Piksel, and re entered the market under a new brand. So, in the aftermath, the company continued as Pixel post bankruptcy. It's technically still publicly traded, I think. It trades expert market. The last trade was on the 29th of August. Someone bought 100 shares at 0.000001 cents. In September 2015, the Justice Department announced the arrests of Kaleil Isaza-Tuzman and CFO Robin Smyth. Robin Smyth was extradited from Australia and agreed to cooperate with prosecutors. He pleaded guilty and was sentenced to time served and a $100,000 fine. Gavin Campion also pleaded guilty to fraud and cooperated with prosecutors. Now, when Kaleil was arrested, he was in Colombia developing a luxury hotel. So the U.S. government issues an arrest warrant, which is carried out by Colombia. Kaleil gets arrested and ends up spending almost a year in Colombian prison waiting to be extradited to the U.S. to face charges. The prison he was at is apparently the most notorious prison in the country and houses some of Colombia's most violent offenders. He ended up being raped at knife point, assaulted, extorted, spent months in solitary confinement. It was a bad, bad time. But finally, Kaleil was extradited from Colombia to the U.S. He eventually was found guilty on all charges, but because of what he experienced when he was in the Colombian prison, the judge actually decided not to assign any more prison time, and so Kaleil was sentenced to 3 years probation. The Amanat brothers were also found guilty. Omar was sentenced to 5 years in prison. His brother Irfan got 4 years. Finally, Stephen Maiden was sentenced to 7 years in prison for securities fraud. All right, so we'll review some core failures, red flags, and lessons learned. First was accounting engineering. The heart of the scheme was faking revenue to meet analyst expectations and improve the stock price for financing. The fake licenses, misleading auditors, and the companies they were acquiring, altering documents, and actually, the same goes for Maiden Capital. Probably the biggest red flag was the auditor issuing an adverse opinion on internal control over financial reporting in the 2011 10K. We also had the cash round trips to fake collections, where the company funds were routed through third parties and offshore accounts and back into the company to masquerade as customer payments, propping up receivables revenue. And then on top of the accounting fraud, there was the conspiracy to support, price and volume of the stock, especially around uplisting and when they need to issue more stock for financing and acquisitions. And a lot of this kind of leads up to roll-up execution risk, because roll-ups are kind of notorious for accounting gimmicks because it's so much easier to play accounting games when you're constantly changing the field, via acquisitions. It's a magician's trick. The more things you can distract the audience with, the easier it is to commit fraud. Now, obviously, roll up doesn't immediately mean there's fraud going on, but it does create complexity usually and a temptation to sometimes mask true performance, especially if that performance is bad or the incentives are bad. I think the tough thing about this case is there wasn't really a smoking gun you probably would have found from the outside looking in until it was too late. Aside from, in my opinion, it just looked like a shitty company from the cash flow statement. There was an adverse opinion, but that came kind of late in the game. By the time they restated the 14 quarters, etc., the stock had already been crushed. So like I said, I'd pass on this type of company in 3 seconds just looking at the cash flow statement. The income statement, you had revenue increase from 50 million to 200 million in 3 years, but operating cash flow didn't improve at all. You had massive dilution. 6.5 million shares to 41 million shares. The company had 25% market share, but this type of investment just isn't my style. You could have noted receivables growth compared to revenue growth and cash flow statement, and maybe that raised some brows. It wasn't quite as obvious as something like Dubber, where if I read about cash being held in a third-party trust account instead of a bank, I'd throw out an immediate red flag. These guys were very aware of what they were doing. They were careful not to trigger auditor suspicions. They lied as much as they could to everybody that they could. Omar had a history of lawsuits related to frauds, but as far as I can tell, you wouldn't have even known he was involved until after the fact. So it's kind of tough to find red flags that could have warned you before you were already sitting on massive losses, assuming you even bought this thing. I do think there's a lot of psychological lessons to take some time and think about. From the perspective of Maiden Capital, for example, where he just got crushed during the great financial crisis, like a lot of people, and then ended up, being conned into giving a bad loan to another company and just kind of fell into this cycle that ended up perpetuating as a Ponzi scheme. There was no malicious intent, I'd imagine, when he started his fund, but failure and pressure caused people to do stupid things. I keep thinking back to the quote at the beginning of the episode where Kaleil's investor from his .com venture, when he said, "I made a mistake with you. I usually don't invest in people who haven't failed before." That's a really interesting sentiment, but obviously Kaleil didn't learn the right lessons from failing. He just went back out and did something much more dumb. Maybe the pressure of failing again drove him into the mess. I don't know. I don't have all the answers, but there's a lot of things to think about. But the bottom line is KIT Digital had real software, real customers, real market share. Kaleil said in a 2010 interview that content was going to move away from traditional cable and become more curated towards people's individual preferences. He had that much foresight, at least. But controls, choices, incentives, it all turned into a legal and financial sinkhole that led to a lot of people and many different entities losing all their money. And it doesn't really matter if you're an executive, a shareholder, or portfolio manager. Investing is hard. And that's it for this one. I hope you found this one interesting. Feel free to leave me feedback, and I'll be back next week.